procedure, and everything that we do must be planned and documented. So this is the summary on the series of what we had started. The purpose of audit planning, just like generally in life, we must plan. And why do we plan? Audit planning are to ensure appropriate attention is paid to different aspects, different areas of audits and audit work, just like in life too. For us to pay attention to critical aspects of life, we plan ahead. We plan going out on a day. Some of us, we have to iron our clothes yesternight before we go out today and do so many other things. We may need to make some phone calls so that we don't just go there tomorrow and find the person we intended to meet not available. So that is important of planning, and purpose of planning is to ensure attention is given to what requires it, and to ensure that potential problem areas are identified earlier, even before we go to on the field. And having identified them, we will be able to ensure we do and give them proper attention. And equally, it helps us to facilitate review after field work. So that is the importance of planning and audit. Also, when we are planning procedure vary from one audit, one audit experience, one audit client to another. But generally, audit adopts systematic approach to the planning process. Like, we must understand our client business, we must know our client's history, we must know their risk exposures, then we can go back to the office and plan before we move out, so that necessary resources to high risk area, we can devote them to them. If we need to withdraw a key staff, experienced staff to work on that client's risk area, those are part of the planning and procedure, the deadlines and the like. So planning procedure will vary depending on who and which clients, which industry we are actually auditing. Another thing that I would like to itemize in this summary is that the work of planning is a continuous process, because even though we've planned, we get to the field, some things may change, and it is important for those of us offering advanced audit and assurance but are not, or we do not have previous audit firm experience, to listen critically to this because of our case study and because of direct experiential questions that will definitely come out. So it's a continuous process. We will not say because we've planned now and we've moved out, everything is cast in stone. No, it must take place throughout the audit life cycle. It must take place throughout audit life cycle. Of course, we are going to go out with our audit planning memorandum to help us to easily understand. We are going to go out with our audit program to help us and give specific instruction. But nevertheless, we get out there and find out that there are some things in the audit program that may not be realistic, or that the situation had changed and we need to recourse back to planning our approach to auditing the aspects that we've observed changes. Also, some auditing firms have formalized the planning process by using a standardized planning memorandum. I just spoke about memorandum. Audit Planning Memorandum, which we call APM, is a standard document in an audit firm, and also we need to tailor it to specific clients. Some things will change, like the name of the client will change, their industry will change, deadline will change, the timetable of our going there and executing will change, the name of staff deployed will change, and so many other things. Internal control systems will change, weaknesses will change, and even though it is a standard document and is part of standard planning process in an audit firm, in an audit engagement, nevertheless, there will be some variation. Also, there may be a risk involved in auditing some clients. And now we are going into risk management, risk assessment, and the like. Of course, we are going to agree that the risk that a retailer bears is different from a risk that an organization that is into, let's say, clothing bears. They are totally different risks, and some risks are more riskier, if there's a word like that, than the other. So risk in audit actually varies, and the riskier the client is, the more work the auditor will plan to perform. The riskier the client, the riskier, the more work, and the riskier in preparedness the auditor needs to be. And our approach will be risk-based the more riskier it is, and many times some accounting firm will not even go for some certain risk exposure of some audit some clients because of their level of risk and the nature of risk. Like, there are peculiar risks that relates to auditing SMEs, and there are peculiar risk exposure that relates generally now to, let's say, Fortune 500 and multinationals, international clients. So an audit firm will decide this and plan towards even this. Equally can even change the dimension of who their client will be. Risk-based audits now is used by auditor to concentrate resources on high risk area in our client's business and high risk environment. So for more on so many things that I'm touching on now, because this is summary, those videos that we had before, just search them on the playlist Advanced Audit and Assurance and Audit and Assurance Q. You will find them there. So that is about risk-based, because we are talking about risk. Also, the totality of audit risk can be broken down into three parts. We have the inherent risk, we have the control risk, we have the detection risk. The inherent risk is what we call in finance systematic risk. It's a risk that belongs to the industry, is a general risk in the industry. It's not specific to our clients. Whosoever does not like spillage should not go for kerosene or petroleum, because there's a risk of spillage. So it is inherent in the nature of business. Control risk are risk that the mitigant we've set, that is our internal control systems, fail to recognize. So those are the exposures that our internal control system fail or still fails to identify or mitigate. So those risks too we can fine-tune our internal control. Now I'm talking on the side of clients to reduce the risk, and on the part of the auditor, all the control risk, our letter of weakness should cover it so that next time we are auditing the clients, they are a bit strengthened. We meet them better than we left them. Last but not the least, of the third aspect of total risk is the detection risk. And when we are talking about detection risk, we are talking about the risk that we as auditor actually bear. That is the risk that our planning, our audit execution fail to actually mitigate or detect the risk. So it's the risk and the only risk that actually, should I say, we cause, okay, we cause, and we have to bear it. If care is not taken, it can lead to negligence. It can lead to negligence. Detection risk can lead to negligence. We are summarizing, so I quickly move on. In planning the auditor needs to establish materiality level even at the planning stage, and this is one of the contents of our APM, that is Audit Planning Memorandum. And to ensure that any material misstatements or omission in the accounting records are discovered, we need to plan and establish our materiality level. And by the time we are equally reviewing, after we had gone to the field and we had returned, we need to review our material risk planned, actual risk obtained. Then we will know, the audit leaders will know what to do about the differential. All this had been said before, how to review after we had gone to the field and we return, and what to do. You can check them up on the audit planning video. It's inside audit planning video. An overall materiality level is set based on evaluation of our client's risk, and that is why it is important before we begin to audit a client, especially the first year audit, to ensure that we know our clients very well, we know their history, we know the nature of their business, we know who their regulators are, we are familiar with the regulation, we know the background of their key shareholders, we know the background and experience of key executives and the management staff and the like. This will help us to determine the overall materiality level. It is important for auditor to record their reasoning on significant matters that require judgment to be exercised. We need to document them. Matters of significance, matters that can cause audits, risk mitigation in the nearest future and the like. And equally, we need to bring them to the attention of our clients, especially those in governance, that we need to report to, and their view also should be documented. Audit working paper, which we just discussed before this video, are usually filed in two separate files, which we've mentioned: the permanent file and the current year file. Those had actually been taken care of. So these basically are what we can talk about when we are summarizing the essential documents in planning, audit planning, and documentation. Gbenga Olatunji FCA has been speaking. Next, we will move on to audit evidence. We are value to life. GJAMES Associates, we are value to your business.